Hey, Steve Saretsky here. As always, this is a Canadian real estate market update. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up, subscribe. I appreciate the support. A little bit of housekeeping to start. I released the first ever edition of the Saretsky report, which is essentially a market recap of the month that was, which is March 2018. We discuss both the condo and the detached market, credit conditions, inflationary pressures. It's got some of my best charts that I'm watching in there. So if you want access to that report, it's available in a PDF. I'll put a link to it below. So check that out. Let me know what you think about it. The plan is to basically releasing one of those every single month. Anyways, want to get into the video here. Basically going to discuss a little bit on the Vancouver market. Then I'm going to switch into some quick highlights of the Toronto market and then just provide an overall thesis. I think some people are getting confused and focusing on the sort of micro of the market versus the macro larger picture of how these things are all intertwined. And so I'm going to sort of elaborate on that. So first off, as I mentioned in my previous video, the Vancouver detached market is going through a noticeable correction. Now you can come here and explain to me that your certain sub area is still doing well or is still seeing some multiple offers. At the end of the day, I don't really care. I'm really focusing again on the bigger picture, which is Vancouver. That tends to lead the markets. Yes, there might be some crazy activity out in the valley. To me, that's just because people are caught up there. They don't really understand what is happening. And so, yeah, I look at the Vancouver detached market. It had a 27-year low in sales for the first quarter of 2018. So I'm not just comparing 1 month. And then you look into the condo market as well. For the first quarter of 2018, Vancouver Condo Sales came in at their lowest total since 2013. It was a 9% decline on a year-over-year basis for that quarter. And so what you can see here is the basically, again, the volumes, the amount of sales and the actual money being spent into Vancouver real estate has been declining. It has been declining ever since 2016. It has failed to retrace those highs. And so that has larger implications, which I'm going to get into in the next little bit. So yes, Vancouver condo prices are still going strong. That's primarily due not because of more demand, as we can see in the decrease in sales. It's actually because lower inventory levels. We're still at crisis levels of inventory, really, so that basically allowed 48% of Vancouver condo sales in the month of March to sell over the asking price. But sales are starting to trend downwards. They will continue to trend downwards because we have a lot of pulling of demand forward. You have two stress tests, more taxation, etc. That's all going to weigh in the market and on sales moving forward. But to add to that, which I think will provide the Vancouver condo market some relief, is new condo construction. The amount of units that have completed actually recently hit an all-time high, a historical record high. And so that goes along with, we currently and still do have a record high number of new units under construction as well. So not only they're finally starting to complete, they're starting to hit the market, and that is going to add to some supply because ultimately the majority of these people that buy these pre-sales are not end users. So they're either going to resell it into the open market when it completes, they're going to rent it out, or they might actually live in there, so their existing unit will probably free up. Or again, worst case scenario is they leave it empty, but I don't think that's a huge proponent of the market. So these new unit completions are going to continue to increase, and they're going to add some more supply into a market which is seeing falling sales. So that really brings me over to Toronto, which is the same sort of thing. We're seeing decreased volumes. Again, this is as of February. The sales volume, the amount of money spent in Toronto real estate peaked in May of 2017, has since down 20%. So the volumes have declined 20%. And then we're looking at sales for the greater Toronto area. They dropped 40% on an annual basis in March. Yes, I understand that the condo prices are still inching up there, similar to Vancouver, but it's the overall larger implications that I'm really trying to hone in on. So I'm going to get to that first, but I want to quickly touch on, we just talked about how all these new units are completing, etc. in Vancouver, and just looking at some of the pre-sale market and how that pre-sale market, I've been very critical of it and how it acts and the people that are buying in that market. So CIBC recently released a report basically discussing the investor profile and people that are buying pre-sale condos in Toronto. So 44% of people that are buying pre-sale condos in Toronto were eating a negative cash flow every single month. I believe, as they said, over half of them were more than $500 monthly loss to carry the condo. So after renting it out, your mortgage costs, 44% of them are eating a negative cash flow. And so this, again, has this pre-sale condo market is essentially, it's almost like a Ponzi scheme. It's the best trade and it's the worst trade. So let me explain. Basically, it's people that are willing to eat a negative cash flow because they believe that prices will continue to rise. And so if you look at that report as well, they said the average person that bought it, the typical return on investment was 51% by the time they went and resold it. So they bought it, they usually put down a 20% down payment, they held it until completion, they resold it at 51%. The ones that obviously are still holding it are losing, most of them are losing a negative cash flow. But people are only willing to buy these pre-sale condos because they believe they will appreciate. So a lot of people in Vancouver, and I believe Toronto as well, are paying a 10, 15, 20, 30% premium here in Vancouver to buy a pre-sale condo because they believe the prices will continue to rise. And so that whole system, that whole scheme of really funding these developers to build more projects, this really stops as soon as prices stop increasing or even decreasing. And obviously, as we're seeing the detached market, the prices are decreasing. The condo market, again, as I said, is not, but is primarily almost being saved right now because of the low inventory levels. But that whole market, it's almost similar to the short of the VIX trade. So I don't know if you follow stocks or not. The VIX is essentially a volatility trade. So what people were doing over the last 10 years, as central banks manipulated interest rates, manipulated these financial markets to basically create an environment where there's no risk. You put down money in any sort of asset class and it rises. So people were basically shorting volatility, thinking there was never going to be any volatility in the market because central banks would come in and save the day. And then you heard about the Target manager who basically retired and made millions and millions of dollars shorting the VIX, shorting volatility. And of course, just a couple months ago, that trade absolutely imploded. People lost a lot of money. They lost their shirt. And so I see that condo presale market, not to the same extent, but very, very risky, where you're paying a huge premium and you're taking on all of the risk. And that only works if prices continue to rise. And, again, 51% return. I don't necessarily blame people for taking that risk, but I think you're very, very late in the cycle to be doing that, which I'm going to get into in a few minutes. That's really the crux of it. What I'm sort of trying to get home is obviously nobody knows ultimately where prices are going to go for sure, but I think I'd look at it, where are we today? United States, Canada follows a very similar path. They are in the second longest expansion in U.S. history without a recession. So typically the business cycle or credit cycles, they usually last between 6 to 8 years, and then you have a little recession, and then you come out of it growing again, and you go another 6 to 8 years. So we're now at 10 years in the United States. Canada is obviously very similar to that. And then as Ray Dalio, who is the founder of Bridgewater, I believe, they are the largest hedge fund in the entire world. You have to have a net worth of minimum $1 billion to invest with them. It argues that Canada is actually nearing what's called the long-term debt super cycle, which is essentially about every 40 to 50 years you have really a huge plunge, a deleveraging situation where households become so indebted that they have to eventually pay off those debts. The policies that officials implement to continue to borrow, and they rely on households to borrow more and more money, they really can't. They're almost at their capacity of borrowing rates. And so we've seen that as households have been able to borrow because you've had rates fall, which has obviously allowed real estate prices to increase as well. You've created that scenario, and now it's sort of reaching that point where, okay, rates really couldn't go any lower. Households really couldn't take on any more debt, and now you're starting to see the reverse. So now the central banks are hiking their interest rates, and people are basically strapped out for how much more debt they can take on. House prices are obviously at historical highs, and that's why. And obviously you're very late in the expansion now, as I just mentioned. That's why it's creating this scenario where people are very micro-focused that, oh, well, the condos are still going up. So, what's going to happen is we've sort of gone through our housing correction here, and we're just going to restart the ignition, and the market's just going to take back off again. It simply doesn't work like that. You can't just restart the real estate engine cycle in the very late stages of your credit expansion. And I think policymakers, you have to look at what they're doing. I mean, they're introducing 2 historical stress tests. They're hiking interest rates. That's clearly a signal that they're trying to recapitalize the big banks. They're tightening down on mortgage credit. Lending is getting much tighter, so they understand where we are at the stage. If they felt like they could reignite it or keep it going, they would let it. So that's sort of where we're at, and you have to understand that scenario. Now, again, there's no saying for sure that Canada's going to go through its debt super cycle deleveraging, because ultimately central banks and governments could come in and stop it again, and they suppressed it in 2008 and 2009 when much of the world went through a substantial recession or depression, if you want to call it. Canada did not, because households, instead of actually deleveraging, paying down debts, they actually increased their borrowing capacity, and that's all publicly available data. So it's not like some sort of crazy thesis that somebody has. They borrowed, essentially, government officials implemented policies to allow households to borrow out of it to avoid that. And we've sort of prolonged it here now, but there's only so long that you can push on that string. And I think government officials have figured that out. They understand where we are in the cycle. So I don't really too focus on what the condo market is necessarily doing on a micro and like a month-over-month basis. I'm really looking at overall volumes. What is credit doing? Currently, obviously, credit has been decelerating. Credit growth has been decelerating. Dollar volumes have been sinking since 2016. So have sales. That's really what I'm looking for, because it's pretty much like a precursor to market activity. I don't really care if the condo prices are still going up right now, because a lot of that is exuberance, like in the suburbs in the Fraser Valley, where people are bidding up the prices of these 1-bedroom condos. That's more so on emotional basis and on human psychology than real fundamentals. So that's pretty much it. You just can't reignite the real estate market late stages. So yeah, I think that's pretty much where we're at. That's my thoughts on it. Obviously, if you have any questions, comments, concerns, put those in the comments, and we'll banter back and forth. But again, this is not to say, I think there's a lot of obviously real estate bears out there that are predicting massive doom and gloom, and I think and there's obviously people that are incredibly bullish and think that this correction is over, we're going back up. It's usually somewhere in between. But as I said, Canadian households and the economy is really in a very precarious situation in terms of how much longer it can ride a sort of a credit binge, and so those are really my overall concerns. I'm not necessarily looking at micro stats per se in terms of, yes, the detached market and the condo market isn't, because at the end of the day, the condo market, if the detached market corrects, as of right now, it's down about 10%. If it corrects 15%, 20%, like if people somehow think that condos are going to be exempt, I think they have another thing coming. They'll be very surprised. Condos, what is a one-bedroom condo? It's almost like a commodity. I mean, you can build as many one-bedroom condos as you want, and as we're seeing in Vancouver, the completions are hitting a record high, and we still have a record high under construction. So you can build more one-bedroom units. You can't build more land and more, So I still think the value is in the land and in detached properties. So if those are correcting, it really doesn't make any sense why the condo market wouldn't. And obviously from a credit perspective as well, in terms of banks' willingness to lend, if they see volumes decreasing as they are, and they're starting to tighten up, I don't necessarily think they care too much what the condo market is doing. And it's the same thing with people that are buying up the mortgage-backed securities that are funding the bank's ability to create these mortgages. They're going to look at the market from a macro perspective. So anyways, that's all I got. I don't want to ramble on. Appreciate it. We'll see you next week.